All right, today we're going to dive into something really interesting, the preface of India's economic survey for 2025-26. Why the preface? Because it tells an incredible story of contradiction, a story of how India's fantastic economic year slammed right into a very, very uncertain world. 2025 was a wild ride. As the survey itself puts it, the year kicked off with one set of expectations and, well, it ended with a completely different reality. And that wasn't just true for India, it was true for the whole world. But through all that turbulence, one thing was surprisingly steady, just how strong India's economy was. And that really sets up the big question for this entire explainer, the one the economic survey is trying to answer. What exactly happens when a country's best economic performance in decades runs head-on into a global system that's fragile and totally unpredictable?
Okay, so let's get into it. First, let's look at the good news because, honestly, there was a lot of it. The numbers and the policy moves from last year, they paint a really clear picture of success.
Think about it. The whole world was dealing with major headwinds. We're talking new tariffs, geopolitical drama, you name it. But India's economy? It didn't just stay afloat, it actually sped up. We're now looking at a full-year GDP growth of over 7%. That makes it the fastest-growing major economy for the fourth year in a row. And it wasn't just about growth. The government also showed some serious discipline with its spending. They hit a fiscal deficit of 4.8% of GDP, which was even better than their own target. This keeps India on track to slash its deficit by more than half from where it was back in 2021.
So when you post numbers like that, people start to take notice. And they did. The global community gave India 3 different sovereign credit rating upgrades in 2025. You can think of these as a country's financial report card, and India was getting straight A's. But that S&P upgrade in August, wow, that was a really big deal. This wasn't just another pat on the back. It was the first time a major agency had upgraded India's rating in almost 20 years. That's a massive vote of confidence. So you might be asking, where did all this energy come from? Well, it was powered by a huge wave of reforms. We're not talking about small tweaks here. This was a total overhaul of the tax system, opening up huge sectors like nuclear power and insurance. These were game-changing moves designed to fuel the economy.
Okay, so everything's looking amazing, right? Growth is up, reforms are happening, ratings are improving, but this is where the story takes a turn. The preface calls it the paradox of 2025.
And this gets us to the heart of the puzzle for India last year. With all the fundamentals pointing up, you'd expect the world to reward that, right? But did it? And this quote from the survey just hits the nail on the head. India was doing everything right, but the global system, well, it just wasn't playing by the same old rules anymore. Having a strong economy didn't automatically mean you'd get a stable currency or that foreign money would pour in. This slide shows that disconnect perfectly. On one side, you've got all the domestic signs looking great. Amazing growth, inflation under control, healthy banks. But on the other side, the Indian rupee wasn't doing so well and foreign investment was getting a little shaky. It was a classic case of mixed signals.
So because of this paradox, India has to look at the future in a totally new way. It's not about looking at a world full of opportunities anymore. It's about preparing for a world that the survey calls fragile, uncertain, and filled with risks. And when they look ahead to 2026, the survey lays out 3 possible pictures for the world. And spoiler alert, none of them are exactly rosy. You've got managed disorder, disorderly breakdown, and the really scary one, a systemic shock cascade. And if you look at the odds they've put on these outcomes, it's pretty sobering. There's an 85% chance of a world defined by some kind of disorder, either a little messy or a lot messy. At the end of the day, it's a high probability of a more difficult, more confrontational world. And we have to talk about that last 15% slice. Now, it might seem like a low chance, but the survey is very clear. If that systemic shock cascade happens, we could be looking at consequences that are even worse than the 2008 global financial crisis. Okay, so the world looks pretty tough. What's the game plan? How does a country even begin to navigate a world that looks like that? The answer, according to the survey, comes down to 2 words: strategic sobriety. Now, this doesn't mean being pessimistic. It means being a realist. It's about having a clear-eyed view of the challenges and being practical about how to face them. And in this new kind of world, the things that make you strong,
Well, they change. It's not just about how fast you're growing anymore. Suddenly, things like being predictable, having policy credibility, and just being disciplined, those become your most important assets. The focus shifts to building up safety nets and making sure you can handle shocks when they come.
And I love this metaphor they use. India must run a marathon as if it were a sprint. It just perfectly captures the challenge, doesn't it? You have to build for the long haul, for the marathon ahead, but you have to do it with the urgency of a sprint, right now.
And really, that's the big idea to leave you with. This isn't just a question for India. It's a question for every country, for every leader. In a world that's constantly throwing curveballs, how do you manage to balance that long-term vision with the need to be quick and agile enough to just survive the present? All right, let's dive into a really fascinating story coming out of India's latest economic survey. We're looking at Chapter 1, which has this great title, Pushing the Growth Frontier. And you know what? It tells a pretty amazing story about an economy that's really on the move. Let's get right into it. You look around the world right now, and a lot of places are dealing with so much volatility, so much doubt. But the story in India feels different. And this image, I think, just captures that energy perfectly. A nation that's building, that's moving forward. So the big question is, right, how is this happening? With all these economic headwinds blowing across the globe, what's the engine that's keeping India's growth so strong and so steady? Well, the answers are all right there in the data. Okay, first things first, we've got to set the stage. We need to understand the context. And right now, the global economic stage is, well, to put it mildly, it's fragile. The global economy is kind of being pulled in a dozen different directions all at once. We're seeing intense geopolitical competition, supply chains are being completely redrawn, and you have major economies heading down totally different paths. It's a really complex and unpredictable world out there. And you know, this isn't just a feeling. You can actually put a number on that instability. The Global Economic Policy Uncertainty Index isn't just a little bit high. It stayed way, way up there, far above the historical average. And that makes long-term planning for businesses and for governments incredibly difficult, no matter where you are. This quote from the survey really just hits the nail on the head. That old playbook, you know, the one where you made trade decisions based purely on what was most efficient, yeah, that's pretty much gone. Now it's all about national security, it's about political alliances, and that's fragmenting the whole global system even more. Okay, so that's the challenging backdrop, and this is a big but, the story shifts, and it shifts dramatically when we look at India. The survey positions it as a genuine bright spot in all this gloom. And here it is, the headline number, a massive 7.4%. The first advance estimates are pegging India's real GDP growth for the fiscal year at 7.4. I mean, in the current global climate, a number like that is just, well, it's extraordinary. And get this is not a one-off. This performance actually makes India the fastest growing major economy for the 4th year in a row. 4 years. That kind of consistency tells you something deeper, something more structural is happening here. So where is all this incredible growth coming from? The report is crystal clear on this. The answer, overwhelmingly, is from within. So the first big engine is consumption. People are spending. Private consumption shot up by a really strong 7.5% in the first half of the year. Now, this isn't just a rebound. It's robust, broad-based demand from households, and that forms the very bedrock of the economy. And the second engine? Investment. You can just think of it as the nation building for its future. Gross fixed capital formation, which is basically spending on long-term assets like new factories, roads, and machinery, that has stayed incredibly strong. This shows real confidence, and it builds up the country's productive capacity for years to come. So this is what powered by domestic demand actually looks like. It's the combined force of people out there spending and businesses investing. And when you put those two together, they create this self-sustaining loop of growth that's far less dependent on that fragile global environment we were just talking about. But here's the thing. This kind of domestic strength doesn't just happen in a vacuum. It has to be built on a foundation of solid, stable economic management. You know, one of the biggest achievements that's propping all this up has been taming inflation. Headline CPI inflation, which is really the main measure of your cost of living, has dropped dramatically from 6.7% just a couple of years ago to 1.7%. And that is huge because it means people's money goes further, boosting their real purchasing power and making all that consumer spending possible.
And the world is taking notice. The S&P credit rating upgrade to BBB is a massive vote of confidence. So why does this matter? Well, a better credit rating makes it cheaper for the country and its companies to borrow money on the world stage, which can fuel even more investment. It's the first upgrade like this from a major agency in almost 20 years, and that's a direct nod to India's strong performance. So you take all of this, the strong growth, the solid domestic demand, the stable fundamentals, and it all leads to the report's main conclusion. India isn't just growing fast right now, it has actually raised its potential to grow even faster in the future.
And here it is, the big revision. The Economic Survey now says India's medium-term potential growth rate is 7%. That's up from 6.5% just a few years ago. Now, this isn't just a forecast for next year. This is an upgrade of the entire economy's fundamental speed limit. It's a real game changer.
So what's behind this upgrade? Well, it's the payoff from years of work. The survey points to a whole bunch of things: deep structural reforms that are now bearing fruit, a massive build-out of public infrastructure that's just making the economy more efficient, and much, much healthier balance sheets for both companies and banks. This quote just sums it all up perfectly. It's not one single policy that did this. It's the compounding effect of all these changes working together. It's like years of reforms finally meeting a stable economic environment. And that's what has unlocked this higher potential for growth.
So we kind of end where we started. India has clearly built a resilient, high-growth economy. The big question now is, can it keep this momentum going and turn those global challenges into new opportunities? The frontier has been pushed, for sure. Now, the journey continues.
All right, today we're going to unpack the story behind India's recent economic strength. It's a really fascinating tale of fiscal discipline that's been turning heads globally, and it all comes straight from the government's own economic survey.
So where does this all start? Well, it kicks off with a massive vote of confidence from the global financial community. Back in 2025, after years of careful policy work, India got a clear signal that the world's view of its economy was really starting to shift.
The country got not one, not two, but 3 sovereign credit rating upgrades. This was a huge deal. For one of the big agencies, S&P, it was their first upgrade for India in almost 2 decades. You know, that kind of recognition, it just doesn't happen by accident.
So the big question is, what did India do to earn that trust? To answer that, we've got to look at the government's books. And what they reveal is this incredible tale of 2 very different strategies, both playing out at the exact same time. One at the national level and a completely different one across the states.
Okay, first up, the central government's playbook. Their whole strategy was about something called fiscal consolidation. Basically, a clear, credible plan to get the nation's finances in good shape, especially after the shock of the pandemic.
The main goal here? To shrink the fiscal deficit. Now, put simply, that's just the gap between what the government earns and what it spends. And a smaller gap is a sign of a healthier, much more stable economy.
And you know what? They absolutely nailed it. The deficit was brought down from a pandemic high of 9.2% of GDP to a target of 4.4%. This steady decline wasn't just luck, it was a deliberate, well-executed plan to really anchor the country's financial stability.
So, how'd they do it? This wasn't about random cuts. The government fundamentally changed what it was spending money on, shifting away from just covering day-to-day running costs and moving towards big, long-term investments.
This number right here says it all. The share of capital expenditure, or CAPEX as it's known, nearly doubled. This is the money spent building assets for the future. We're talking roads, railways, digital infrastructure. It's a direct investment in the country's long-term growth engine, the kind of stuff that makes goods cheaper to transport and the internet faster for everybody.
But, and this is a big but, the center's impressive report card is only half the picture. Because at the state level, a totally different trend was taking shape. While the central government was getting its books in order, the combined revenue deficit of the states was actually getting worse. They went from a surplus before the pandemic to a pretty significant deficit. So what was driving this shift?
Well, a huge factor was the rapid growth of unconditional cash transfers, or UCTs. These are programs that put money directly into the hands of citizens, often targeting specific groups like women.
And this approach became incredibly popular. I mean, the number of states with these programs just exploded in just a few years.
Now, while they provide immediate and much-needed income support, they also create a new fixed cost in state budgets that has to be paid for year after year.
So, you might be wondering, why does any of this matter if the central government's finances are so strong? Well, it matters a lot, because global investors, they don't just look at one part of the picture.
They look at what's called general government finances. That's the consolidated account of both the center and all the states combined. This is the number that those credit rating agencies are really zeroed in on.
This quote from the Economic Survey really just hits the nail on the head. It shows the risk perfectly. See, fiscal stress in the states can make it more expensive for the entire country to borrow money on the world stage. This means the center's hard-won credibility could be undermined, leaving less money for everything from national defense to new universities.
But even with these state-level pressures, India's overall performance still stands out globally. The country has actually managed to significantly cut its combined government debt since 2020, while a lot of other major economies, both advanced and emerging, have really struggled to do the same thing.
So this brings us right to the core challenge, the great fiscal balancing act that India's economy is now facing. It's a story of two different priorities running side by side.
On one hand, you have the center's strategy, fiscal discipline to fund long-term investments in the country's productive capacity. On the other, you've got many states prioritizing short-term income support. Both are valid goals, right? But they're competing for the same limited pool of money.
And this leaves us with the crucial question for India's future. Can the country find a sustainable balance between these two approaches, making sure that immediate support doesn't end up crowding out the very investments that power long-term prosperity? Well, that's going to be the key to anchoring its stability and growth for years to come. All right, let's jump right in. We're going to break down a really fascinating chapter from India's latest economic survey. It's all about how the country is managing its financial system. And you know, in a world that feels like it's getting more chaotic by the minute, this is actually a story of incredible resilience.
So this really is the big question, isn't it? We keep hearing about India's strong growth, but with the whole global system getting rocked by one shock after another, what does that stability actually look like on the inside? That's what we're going to do here. We're going to look past the headlines and see how India's banks, its markets, and its policies are holding up against the storm.
Yeah, this quote from the survey just nails it. It really sets the stage. Look, we're not living in that simple, stable, globalized world anymore. The reality is, financial markets have become the new front lines. There were global tensions play out, and a shock on one side of the planet can hit the other side in, well, basically an instant.
So where is all this instability coming from? Well, a huge piece of the puzzle is geopolitics. We're talking about strategic competition that's fueling trade wars, countries scrambling for critical resources, you name it. And this stuff isn't just background noise, right? It creates real, tangible uncertainty that investors and markets have to deal with and price in every single day.
But it's not just about politics and trade. The survey flags a totally new kind of risk, and it's coming from technology. Think about it. As more and more global investors start using the same AI models to make their decisions, you could get this massive herding behavior. Basically, everyone rushes for the exit at the same time, which just amplifies market swings and could create shocks way bigger than what we're used to.
And get this, here's a statistic that just shows you how real this is. Since ChatGPT launched, a tiny handful of AI stocks have been responsible for a whopping 75% of the S&P 500's gains and 90% of its capital spending growth. I mean, when you have that much hope and that much money piled into one small corner of the market, you're creating a brand new, very specific vulnerability for the entire global system.
Okay, so you've got all this global chaos as the backdrop. Now, let's pivot to India. Because the story here is completely different. The survey paints this picture not of a country that's vulnerable, but of a financial system that's actually built up some really serious defenses.
I mean, just look at this. This chart shows the percentage of bad loans, what they call non-performing assets, in the banking system, and it is absolutely plummeted to a multi-decade low of just 2.2%. That is a sign of incredibly healthy bank balance sheets. And that, right there, is the foundation of financial stability.
And here's the other key number you need to know. It's called the capital to risk-weighted asset ratio. Now that's a mouthful, but all it really means is it's a bank's capital cushion. It's the money they have set aside to absorb unexpected hits. And at 17.2%, India's banks are very well capitalized, way above what's required. You can think of this as their financial shock absorber.
And this is so important. None of this happened by accident.
The Reserve Bank of India has been incredibly proactive here. They've been strategically cutting rates, making sure there's enough cash, or liquidity, in the system. They've been actively supporting the economy, making sure credit keeps flowing, and they've done it all while keeping the whole system stable.
But, the story isn't just about what the big banks and the RBI are doing. There's something truly transformative happening at the grassroots level. It's being driven by technology and this whole new wave of everyday people getting involved in finance.
And this right here, it just perfectly illustrates that change. We're talking about the Unified Payments Interface, or UPI. And listen, this is so much more than just a convenient app for paying your friends. The survey calls it a cornerstone for a reason. It has fundamentally rewired the daily economic life for millions and millions of people, bringing them into the formal financial system in a way that honestly was unimaginable just a few years ago.
Okay, now look at how all that connectivity is changing how people behave. This chart shows a huge shift in how Indian households are saving their money. The amount going into old-school bank deposits, that's gone down. But the slice for stocks and mutual funds, it has just exploded. This is what you call the financialization of savings, right in front of our eyes. A whole new army of retail investors is joining the market.
And what's the result of all that new money coming in? Well, get this. India is now #1, first in the world in the number of IPOs, or initial public offerings. This isn't just a story for the big players on Dalal Street anymore. It's being powered by this incredible domestic demand from everyday people, and it's turning India into a global hub for raising capital.
So everything sounds pretty great, right? We've got resilient banks, tons of new investors, smart policy. What could be wrong? Well, this is where the story gets really interesting, because the survey then brings up this fascinating puzzle, a complication that gets right to the heart of the Indian economy. And here it is. This is the paradox. With all these positive signs, why is capital, the money businesses need to borrow to grow, still so expensive in India? It's stubbornly high compared to other countries. So what gives? Well, the answer, according to the survey, isn't something you'll find by just looking at the banks. It's something much, much deeper.
To figure this out, we have to understand one key concept, the current account deficit, or CAD. It sounds complicated, but it's pretty simple. It just means that as a country, India spends more money on foreign stuff, imports, than it earns from selling its own stuff abroad, exports. And when you spend more than you earn, what do you have to do? You have to borrow. So it makes India a net borrower from the rest of the world.
The easiest way to think about this is like a household budget. On one side, you have a surplus economy. That's like a family that earns more than it spends. It's got its own savings, and it can invest them pretty cheaply. On the other side, you have a deficit economy. That's like a family that consistently spends more than it brings in. It has to keep borrowing from the neighbors. And you know what? Those neighbors are going to charge a little extra interest, a risk premium, because hey, they're taking a risk by lending to you.
And that, right there, is the core argument of the survey. The reason capital is expensive in India isn't just because of what banks are charging or what the RBI is doing. It's a structural price the entire economy pays for depending on foreign savings to fuel its growth. The bottom line is, as long as India runs a current account deficit, global lenders are going to charge that risk premium.
So, that's the problem. How do you even begin to solve something so deep and structural? Well, the survey proposes a path forward, and it's not about quick fixes or band-aids. It's about building a fundamentally smarter and more efficient financial system for the long, long haul.
The really big idea here is a total shift in regulatory philosophy. The plan is to stop regulating companies based on their label. You're a bank, you're a non-bank. Instead, the focus is on regulating the activity. So if a bank and some other kind of company are both offering loans, they should be playing by a similar set of rules, because the activity and the risk is the same.
And this new approach is built on 4 simple principles. First, proportionality. The size of the rule should match the size of the risk. Simple as that. Second, consultation. Actually talk to the people in the industry to make better, more practical rules. Third, accountability. Make sure there's clear oversight. And finally, that big one, being activity-based. Focusing on what companies do, not what they're called, to create a level playing field for everyone.
And all of this serves a much bigger vision. The end game is to create a more diverse financial ecosystem, a system where companies don't have to rely only on banks for money. They can also tap into a deep corporate bond market, for instance. When you have more options like that, you spread out the risk, you create more competition, and over time, that helps bring down that high cost of capital for everybody.
It's about channeling all those new savings from everyday people into productive investments and really paving the way for India's long-term growth goals.
Which of course leaves us with the big final question. The economic survey lays out a really clear diagnosis of the problem and a very thoughtful solution. But the challenge, as it always is, comes down to execution. Can this shift towards smarter, more agile regulation actually build a financial system that's not just strong enough for today, but ready for the massive ambitions of 2047?
All right, today we're going to dive deep into Chapter 4 of India's latest economic survey. We're looking at how the country is navigating a global economy that's, well, changing faster than ever. This isn't just about trade statistics, it's really about playing the long game in a world where the old rules just don't seem to apply anymore.
You know, for decades, India has been weaving itself more and more into the fabric of global markets. And this isn't just numbers on a page, it's about becoming a really crucial part of the world's supply chains, a key player in that constant flow of goods and services. But what happens when that flow gets, well, complicated?
And there it is, straight from the survey itself. This really gets to the heart of the challenge. The era of super easy, seamless globalization, that's kind of fading. We're now in a world that's way more cautious, where countries are looking inward and supply chains are literally being redrawn based on a whole new set of geopolitical rules.
So yeah, the game has totally changed. It's not just about who can make things the cheapest anymore. The survey points out that trade policy is now being driven by things like national security, the race for tech dominance, and strategic independence. It's a much more complex chessboard to play on. So how is India supposed to respond to all this? Well, the answer really lies in these two massive and very different engines that are driving its whole trade story. You've got goods on one side and services on the other.
Okay, so first up, let's talk about merchandise trade, the actual physical stuff. While our exports are holding pretty steady, imports have really shot up. And what that does is widen the trade deficit to over $283 billion. That is a big gap to fill. But, and this is a huge but, here comes the counterpunch. While the goods trade shows that deficit, India's services sector is an absolute powerhouse. I mean, services exports hit an all-time high of nearly $388 billion. That creates this massive trade surplus of almost $189 billion. This is basically India's secret weapon in the global economy.
And when you put them side by side like this, you really see the dynamic at play. On one hand, a major deficit in physical goods, and on the other, a huge surplus in services. It's really a tale of two completely different trade stories happening at the same time. Understanding this balance is absolutely key to understanding India's entire external strategy.
The impact of this is just massive. That giant services surplus isn't just a nice number on a chart. It acts as a crucial financial buffer, a kind of shock absorber for the economy. The survey points out that it covers nearly 2/3 of the goods deficit. That provides some serious stability to the whole system.
So keeping this whole complex picture in mind, what's the playbook? Well, it's definitely not about standing still. It's about being proactive with a two-part strategy. First, diversify your markets, and second, deepen your partnerships. Let's look at a real-world stress test for this strategy. The survey notes that the U.S. put a really high tariff rate on a lot of Indian goods. Now, for any country, that is a major shock to the system, especially when it involves your biggest trading partner.
And here's what happened. Just look at gems and jewelry. Exports to the U.S. absolutely plummeted, down by over 44%. That's a huge hit. But now look at the exports to the rest of the world. They actually grew a little bit. This shows some incredible resilience. Indian exporters didn't just take the hit, they pivoted. Fast.
So where did they pivot to? Well, the survey lays out the data. For gems and jewelry, they found new buyers in the UAE, Belgium, and Israel. For things like auto parts and textiles, it was a mix of markets in Europe, the Middle East, and even South America. This is exactly what diversification looks like in action.
Now, the other part of the playbook is deepening. India is pushing hard to negotiate free trade agreements with key partners like the UK, the EU, and Oman. This is all about moving beyond just reacting to problems and instead locking in stable, long-term market access in a world that feels increasingly uncertain.
But look, to play this long game, to be able to withstand shocks and go after new opportunities, you need a rock-solid financial foundation. So let's take a look at how India's financial buffers are holding up. This one number really says a lot. India has enough foreign exchange reserves to cover over 11 months of everything it imports. Think about that.
That is a massive safety net. It gives the country the stability and the confidence to handle global ups and downs without hitting the panic button.
So, where does all this stability come from? It's a balancing act. While you've got that deficit from buying goods, it gets offset by the money coming in from services and from net transfers, which is mostly money sent home by Indians working abroad. These positive flows are what help keep the country's overall accounts in balance.
Another key piece of this foundation is just having manageable debt. The data shows India's external debt as a slice of its economy has stayed low and stable. This is so important because it prevents the kind of financial pressure that can totally derail a country's long-term plans when a global crisis hits.
And finally, it's about attracting the right kind of money. The survey really emphasizes a focus on foreign direct investment, or FDI. Why? Well, because FDI isn't just hot money or quick cash. It's stable, long-term capital that brings new technology, builds factories, and boosts productivity. It's a real investment in the real economy.
Okay, so with a clear strategy and a strong foundation, what does the end game actually look like? Let's try and connect all these pieces and see what's on the road ahead.
The journey so far has been all about leveraging those record services exports, successfully dodging trade shocks by diversifying, and deepening ties with new trade deals. So what's next? The outlook is a continued push on boosting manufacturing and integrating even more deeply into global value chains, basically becoming an essential part of how things are made and sold all over the world.
So the bottom line is pretty clear. As India steps into this new, more fragmented global era, it's doing so from a position of real strength. It's got solid financial buffers, it's got diversified trade relationships, and it's shown that it can adapt and be resilient when things get tough.
Which really leaves us with this one final crucial question. It's one thing to be resilient, to be able to absorb shocks, but it's something else entirely to become so essential to the global system that other countries actually depend on you. And making that leap from just being resilient to becoming indispensable, well, that's the ultimate long game.
Okay, so in a world that's been wrestling with all kinds of economic headaches, there's one story that really stands out, and that's India's incredible success in taming inflation. While a lot of major economies were struggling, India managed to bring prices way down, and all while the economy kept growing strong. So how did they do it? Well, the latest economic survey gives us the inside scoop, and we're going to break it all down for you.
First things first, I just want you to look at this number, 1.7%. That is the average retail inflation in India for the current financial year up to December. Now, to give you a sense of just how big a deal that is the lowest average inflation rate we've ever seen in the current data series. Just an absolutely stunning achievement. But to really get it, we need to see how India's performance stacks up against the rest of the world.
And wow, the results are striking. You can see here that India's drop in headline inflation was incredibly sharp, blowing past what other major economies were able to do. So this wasn't just a domestic win. This was a global standout performance. It even led to credit rating upgrades, which is a huge vote of confidence in how India's economy is being managed.
So the big question is, how on earth did India pull this off? Well, it wasn't just one magic trick. It was actually a really powerful combination of things, from the food on our plates to some very smart government moves.
The whole thing really rests on three key pillars. First, a huge drop in food prices, and we'll see just how huge in a second. Second, the government was really proactive, stepping in at the right times to keep things stable. And third, something called the base effect. All that means is that because inflation was so high last year, this year's lower numbers look even better by comparison. It's all about your starting point. And that drop in food prices, it had a massive impact on everybody's daily life. Get this. Prices for staples like potatoes, onions, and tomatoes didn't just stop rising, they actually fell. We're talking drops of between 20 and 40%. That is some serious relief for household budgets right there.
And it wasn't just good weather. Smart policy played a huge part. Take edible oils, for example. When global prices were tanking, the government stepped in with a customs duty to protect local producers. But then, as prices started to creep back up, they quickly cut that duty to ease the pressure on you, the consumer. It was this really active, flexible approach, kind of like using policy as a thermostat to keep prices just right.
All right, but here's where the story takes a really interesting turn. While the main inflation number was falling, another number, called core inflation, seemed weirdly high. It was a real puzzle for economists. So this was the big question on everyone's mind. If food prices are plummeting and the overall trend is down, what in the world is keeping this underlying inflation number so stubbornly high? To figure that out, we first need to know exactly what we're talking about.
So, real quick. Core inflation is just the inflation rate once you take out all the jumpy, volatile stuff like food and fuel. The idea is to get a clearer picture of the deep, long-term price trends in the economy. And that picture, well, it seemed to be telling a very different story.
And the solution to the puzzle? You might not guess this. It was precious metals. The standard core number was sitting around 4.3%. But because of all the geopolitical uncertainty out there, people rushed to buy gold and silver as safe investments, pushing their prices through the roof. The moment you strip out gold and silver, boom, the real underlying inflation drops to just 2.3%. That stubbornness? It was really just an illusion caused by the global rush for bullion. And look, this success wasn't just India patting itself on the back. Big global players noticed. S&P Global Ratings, for instance, pointed out that India's focus on targeting inflation has really paid off, creating a much more stable and predictable economy. That's a huge endorsement.
Okay, now let's dig a little deeper. Because if you look beyond the headline numbers, the data tells us about some fascinating shifts happening just beneath the surface of the Indian economy.
So the first story is about something called the terms of trade. Now, it sounds super technical, I know, but the idea is actually pretty simple. It's just a way to see which part of the economy has more power to raise its prices compared to another part. It's all about pricing power. And the big matchup here is between two giants, agriculture and manufacturing. Over the last decade or so, who's been able to charge more for their goods? Who's won the pricing game? Well, the answer is clear, and it's a really big deal. Since the 2011-12 base year, the price index for agriculture has more than doubled. Meanwhile, manufacturing prices have grown way more slowly. This means the economic power, the terms of trade, has been shifting steadily towards agriculture. And why that matters is it directly boosts rural incomes and signals a massive change with long-term effects for the whole economy. Now for our second subplot, which is kind of a tale of two Indias, rural and urban. It turns out that your personal experience with inflation really depends on where you live. Let's start with the main headline: inflation. See, in rural areas, a bigger chunk of the monthly budget goes to food. That means when food prices go on a roller coaster, so does rural inflation. The swings are just much bigger, much more dramatic, tracking those food prices almost perfectly. But, and this is the really cool part, the moment you look at core inflation, where you take out that crazy food and fuel stuff, the picture completely changes. The paths for rural and urban core inflation are incredibly stable. They move almost perfectly together. It's like finding this deep, calm, steady current running underneath all the choppy waves on the surface, telling us the underlying economy is actually pretty similar across the country. Okay, so after this amazing success in bringing inflation way down, the billion-dollar question is, what's next? Is this the new normal? Well, the big forecasters, we're talking the Reserve Bank of India, the IMF, they're all pretty much on the same page. They think inflation will probably tick up a little from where it is now, but they see it settling around 4%. And that's right in the sweet spot of the RBI's target range. It suggests we're heading back to a stable, predictable price environment. But of course, nothing's guaranteed. There are definitely a few clouds on the horizon to keep an eye on. Things like rising global prices for industrial metals, the risk that a weaker currency could import inflation, any kind of unpredictable global shocks, and yeah, that continued high demand for gold and silver. Which brings us to our final thought. India has proven it has the tools and the strategy to tame the inflation beast and drop a really solid anchor. The challenge now, in a world that just seems to get more and more uncertain, is whether that anchor is going to be strong enough to hold firm against whatever storms might be coming next. All right, let's dive right into the heart of the Indian economy, its massive agriculture sector. Today, we're going to break down the three big pillars that the latest economic survey says are shaping its future. That's boosting productivity, securing farmer income, and, of course, ensuring food security for over 1 billion people. Okay, so to really get a handle on Indian agriculture, you've got to understand this one central paradox. You see, this sector is literally the backbone of employment. It supports a huge chunk of the population, but its slice of the national income pie, it's way, way smaller. And that imbalance, well, that's the fundamental challenge we're going to explore today. Just let that number sink in for a second. 46.1%. That means almost 1 out of every 2 people working in India relies on agriculture to make a living. It's a huge figure, and it really drives home why the health of this sector is just so critical for the whole country's growth and stability.
So, how do you even start to tackle a paradox that big? Well, the first pillar is all about productivity. It's about getting more crop, more value out of every single piece of land. Let's see how that's shaping up.
Now, on the one hand, there's a real success story here. You can see food grain production has been on a steady climb, hitting a new high just recently. So progress is absolutely being made, no question about it. But, that's not the whole story. And here's the flip side of that coin. Even with production going up, when you put India's average yield for big crops like rice and maize next to the world's best, you see this pretty significant gap. It tells us there's still a ton of room to grow. Literally, we could be getting so much more out of each hectare.
So the big question is, how do you close that gap? Well, the economic survey really zeroes in on 4 key areas: making sure farmers have access to top-quality seeds, rolling out more efficient irrigation, pushing for more farm machinery, especially for smaller farms, and using digital tech to get better info and services out there.
But, boosting yields isn't just about throwing more stuff at the problem. It's about using the right stuff. This brings up a really tricky issue: fertilizers. The heavy subsidies on urea have kind of pushed farmers to use it a lot, leading to an imbalance that can actually hurt the soil in the long run. The real goal is to shift towards a more balanced approach that focuses on soil health first. All right, let's move on to our second pillar. Because look, it's not enough to just grow more food. The people growing that food have to be financially secure. So this part is all about the economic well-being of the farmers themselves. Now, a huge piece of this safety net is something called the minimum support price, or MSP. Basically, for 22 key crops, the government sets a guaranteed price. Think of it like a price floor. It protects farmers if market prices suddenly crash and makes sure they get a decent return for all their hard work. And you can really see that commitment in the numbers. The government has been consistently raising the MSP for major crops like paddy and wheat. The policy is to set it at least 1.5 times the cost of production, which gives farmers a much better sense of price certainty. But the support doesn't stop with just prices, and this is a real game changer. Schemes like PM-KSAN are all about direct income support. We're talking about cash transfers that go straight into farmers' bank accounts. This gives them a stable financial base that isn't tied to the ups and downs of the market. And the scale of this is just staggering. We're talking about over 4.09 lakh crore rupees. That's a massive amount of money put directly into the hands of farmers since this program started. It's a huge financial boost meant to help them weather storms and invest back into their land. And finally, you can't talk about financial security without talking about insurance. Farming is a risky business, right? You've got weather, pests, you name it. This quote from the survey sums it up perfectly. Crop insurance is that vital buffer that protects farmers from a bad season, stabilizes their income, and helps them get back on their feet fast. Okay, on to our third and final pillar. So we've talked about growing the food and supporting the farmer. Now let's look at the absolutely colossal system that gets that food to the people and makes sure the entire nation is food secure. And listen, when we call India's public distribution system the largest food safety net in the world, that is no exaggeration. It is a massive logistical operation, procuring grain, storing it, and then distributing it to the most vulnerable people across the country. The reach of this thing is just immense. It covers nearly 80 core people. That's 800 million. And with the One Nation, One Ration Card reform, the system got even smarter. It means people, especially migrant workers, can get their food rations no matter where they are in the country. It's a huge deal. So what does this system actually look like on the ground? Well, picture a network of over 500,000 fair price shops. 5.43 lakh of them. These are the local, last-mile spots that dot the entire country, making sure food grains get to every single corner. What's really revolutionized this whole operation, though, is technology. I mean, just look at these numbers. Almost every single ration card is now linked to a biometric ID, and nearly all the shops use electronic point-of-sale machines. This has been incredible for plugging leaks and making the whole process way more transparent and efficient. So, we've looked at the 3 pillars. But where do we go from here?
what does the future hold? Because Indian agriculture is really at a crossroads, and it's facing a whole new set of challenges that are going to need some fresh thinking.
And the hurdles ahead are pretty significant. You've got climate change making weather more and more unpredictable. The average farm size is really small, which makes it tough to scale up. Water is becoming a huge issue. And, of course, there's the ongoing challenge of connecting farmers smoothly to bigger markets. So the path forward laid out in the survey is really a four-part strategy. It's about pushing for climate-smart tech to deal with new risks, helping farmers band together in collectives to get more bargaining power, seriously investing in supply chains to cut down on waste, and finally, getting those fertilizer reforms done for long-term sustainability. And really, it all boils down to this one huge question. The entire future of Indian agriculture kind of hangs on the answer. It's this incredibly delicate balancing act. How do you make sure everyone is fed and farmers are secure right now, while also protecting the soil, the water, and the climate for all the generations to come? It's the big question to think about. Thanks so much for joining me. In a world that feels, pretty uncertain and slow these days, what if I told you that one huge part of India's economy isn't just getting by, it's actually thriving? It's not just holding its ground, it's pushing into brand new territory. Okay, so let's get into it. We are talking about the services sector. For the longest time, when we pictured what makes a country's economy strong, we'd think of factories, right? Manufacturing, physical goods. But today, that story is changing, big time. India's growth is being fueled by a totally different engine, one built on ideas, on technology, and on people. This is the services sector, and it's become the new backbone of the entire Indian economy. And just how big is this backbone? Well, get this. The services sector now makes up more than half of India's gross value added. In simple terms, that's over half the value of everything produced in the country. It's the single biggest piece of the economic pie. It's not just a part of the story, it is the story. And this strength isn't just important for India, it's a really big deal on the world stage. Think about it. While the global trade and physical stuff has kind of stalled, getting caught up in all the geopolitical drama, the trade and services just keeps on growing. It's become this incredibly important stabilizing force for the whole system. The Economic Survey has this perfect phrase to describe it, and it really nails the sector's role. It's a high-growth, low-volatility anchor. Just think about that for a second. It gives you all the speed and excitement of rapid growth, but without all the crazy ups and downs you see in other sectors. It's like the economy's accelerator and its shock absorber, all rolled into one. So how does this stability actually play out in a real world? Well, when you start comparing India to what's happening elsewhere, you can really see just how resilient this engine is. The data here is pretty striking. After the pandemic, a lot of major economies, including China, saw their services growth slow down, and in some cases, slow down a lot. But India, it stayed remarkably strong, keeping its momentum right up there with pre-pandemic levels. It's a performance that really, truly stands out from the crowd. And this isn't just some abstract number on a chart. This growth creates jobs, real jobs for real people. The services sector is responsible for more than half of all new formal jobs being created. It's the main engine of urban employment, and that's absolutely critical for India's huge and growing workforce. But maybe the most incredible story here is what's happening with exports. I mean, sure, merchandise exports have been growing, but services exports, they've just soared. They've become the absolute star performer, giving India's trade balance a much-needed cushion, especially when the global demand for physical goods is weak. And just look at that acceleration. The average yearly growth in services exports basically doubled after the pandemic, jumping to a massive 14%. This isn't just steady growth. This is like hitting the afterburners. It shows there's this huge global hunger for what Indian services can do. So with all this amazing success, it's easy to think, great, problem solved. But it also makes us ask a tougher question. Is this kind of export boom enough to fix all of an economy's deep-seated challenges? The answer, as you might guess, is a little more complicated. Okay, so here's a really fascinating argument from the survey. Manufacturing is what they call system forcing. To export a car, you need good roads, efficient ports, smooth customs. It forces the whole country to upgrade its infrastructure. Services, on the other hand, are firm selective.
A world-class software company can thrive with just a great team and a fast internet connection, even if the roads outside are terrible. They can bypass weaker systems. And that's the hidden danger. With services booming, there's less pressure on the government to make those really tough, system-wide reforms that benefit everybody.
So, with that in mind, let's pop the hood on this export boom. What exactly is fueling this digital dominance on the world stage? Well, it really comes down to a few key high-value areas.
First, you've got software services. That's the OG, the longtime champion, making up over 40% of the total pie. Then you have this incredible boom in professional and consulting services. Their growth has been just explosive. And a big reason for all of this is the rise of Global Capability Centers, or GCCs. That's where the world's biggest companies are setting up their own huge tech and operations hubs, right here in India. And the story doesn't stop there. There's this really powerful trend called servicification. Now, what that means is that manufacturing itself is becoming a services business. Think about it. A new car is basically software on wheels. So much of its value isn't in the steel anymore. It's in the design, the research, the software, and the digital features. The lines are blurring and services are everywhere. So, if that's the powerful present, what about the future? Well, the story is starting to move beyond just the traditional IT world and into some really exciting, almost sci-fi new areas. We're seeing the start of a commercial space industry. We're seeing growth in the creative sector, also called the orange economy. And we're seeing new ventures in things like ocean technology. These aren't just little side projects. They could be the next massive wave of service innovation. I mean, just take the space economy, for example. It's projected to grow more than 5 times over in the next decade alone. We're talking everything from launching satellites for other countries to analyzing Earth observation data. This is a super high-tech frontier, and Indian services are in a perfect spot to take the lead. And then you've got the orange economy, which includes the booming concert economy. It's incredible to see how a huge concert or festival can drive tourism, media, and all sorts of other services. It's about turning culture and entertainment into a real, serious economic force. So the potential is just immense. You can see it. But to keep this amazing momentum going, we have to be really smart and honest about the challenges and the big choices that are coming up. To make sure this success story continues, it really comes down to 3 huge things. First, we've got to bridge the skills gap, and fast. That means getting the workforce ready for AI, for data analytics, for cybersecurity. Second, we need to really encourage deep innovation that's connected to what industries actually need. And third, we've got to simplify the rules and regulations to make the whole environment stable and attractive for long-term investment. And all of that brings us to the final and maybe the most important question. With all this new technology and all these new frontiers opening up, from AI to outer space, the biggest challenge is going to be people. Making sure that India's massive workforce has the right skills at the right time, well, that's going to be the real key to conquering whatever comes next. All right, let's jump right in. In this explainer, we're tackling a huge topic from the latest economic survey, India's next big industrial leap. We're talking about the journey from being a local factory to a true global powerhouse. So let's kick things off with a really big question. How does a nation actually transform itself from just a marketplace into a global factory? You know, this isn't just about making more stuff. It's about a fundamental shift in a country's entire economic identity. And that ambition is exactly what we're going to explore today. So here's how we're going to break it all down. First, we'll look at the new rules of the global manufacturing game. Then, we'll dig into India's incredible industrial resilience. After that, we'll unpack the government's blueprint for making this leap, see how it's empowering small businesses, and finally, we'll look at the roadmap to full global integration. Sound good? Let's go. First up, a new global game, because let me tell you, the rules for winning in manufacturing have been completely rewritten. And this really gets to the heart of the matter. The old playbook, you know, the one where you win just by being the cheapest producer, that's over. It's done. Now, things like geopolitics, supply chain security, and just sheer reliability, they're taking center stage and changing, well, everything. So if cheapest is out, what's in? It's this idea right here, strategic indispensability. Now, this is a fascinating concept. It's not just about being a reliable supplier anymore. It's about becoming so deeply woven into global value chains with high-tech, super productive manufacturing that the world literally needs you. That is the new goal.
And this is exactly where India is starting to make some serious waves. I mean, look at this. In a tough global environment where Europe's manufacturing was actually shrinking, India's performance in Q3 2025 was remarkable. It grew at 1.3%, matching China's pace. That's not just surviving a downturn, that's standing out. Which brings us perfectly to our next section. We're talking about India's industrial resilience. It has truly become a bright spot in what's been a pretty tough global climate. So here's the bottom line. Faced with all these global headwinds we've been talking about, India's industrial engine isn't just chugging along. It's actually accelerating. This whole story is really one of building momentum. And that acceleration isn't just about making more stuff. It's about making better, more complex stuff. This chart is so telling. It shows a real shift towards sophistication. Almost half, nearly 47% of India's manufacturing value is now coming from medium and high-tech sectors. We're talking about things like electronics, pharmaceuticals, advanced machinery. A massive structural transformation is happening right now. And the numbers? Well, they really tell the story. Just look at the year-on-year industrial growth. It jumped from 5.9% last fiscal year to a really solid 7.0% in the first half of this one. That's the acceleration we're talking about, captured right there in one simple, powerful comparison. Okay, so how is all this happening? That brings us to the core of this whole thing, the blueprint for a leap. This is where we see this strategy in action. The government's whole approach is built on these 5 pillars of competitiveness. And you can see it's not about one single magic bullet. It's about creating an entire ecosystem, making it easier to do business, boosting R&D, skilling up the workforce, building world-class infrastructure, and, this one's absolutely critical, helping the small and medium businesses scale up. And right at the very heart of this blueprint is one flagship policy that you've probably heard a lot about, the Production Linked Incentive Scheme, or PLI. This is the real engine driving so much of this change. And what an engine it is. Get this. As of September 2025, the PLI scheme has attracted a massive 2 lakh crore rupees in investment. That number alone tells you there's a huge confidence coming from the industry.
But hey, it's not just about money and investment, right? What about people? Well, the scheme has helped create over 1.2 million direct and indirect jobs. So this isn't some abstract economic policy. It's actually creating livelihoods for a lot of people.
And finally, there's the global connection. PLI-supported sectors have generated a staggering 8.2 lakh crore rupees in exports. This really proves the strategy isn't just about make in India, it's about make for the world. You've got investment, jobs, and exports. That's a really powerful combination. Okay, now let's zoom in a little bit. From the big picture strategy to the real backbone of the economy. We're talking about empowering the MSMEs, the micro, small, and medium enterprises. These really are the unsung heroes in this whole story. Wow, okay, this table tells a really interesting story. Just look at the contrast in year-on-year growth for bank credit. While large industries saw pretty sluggish growth of just 1.8%, credit to MSMEs surged by 18.5%. That shows a very clear, deliberate effort to get money flowing to where it can really fuel growth from the ground up. Of course, it's not all smooth sailing. I mean, these businesses face some major hurdles. Getting formal credit can be really tough. They often don't have a lot of assets to use as collateral, and something as simple as delayed payments from bigger clients can completely freeze their working capital. And this is where we see a really targeted response. For each of those problems we just mentioned, a strategic solution is being put in place. The revamped credit guarantee scheme helps with the collateral issue, the Self-Reliant India Fund provides equity, and online dispute resolution is tackling those delayed payments head-on. It's a problem-solution approach. So, where does all of this lead? Well, our final section lays out the roadmap to global integration. This is the final leap. This quote from the economic survey itself really says it all. It calls for a calibrated shift, moving away from just protecting domestic industry and moving towards a model that's all about scale, being competitive, innovating, and getting deeply integrated into global value chains. It's a fundamental change in philosophy. And this timeline just visualizes that evolution perfectly. Back in the 90s, the focus was make for India. In the 2020s, it shifted to building resilience, being able to withstand global shocks. And the future? The goal is that strategic indispensability, getting to a point where the world literally can't make things without India.
Which brings us to our final question, and it really is the big one. With this blueprint in place, with all this momentum building, can India actually complete this massive leap and become not just another player, but a truly strategic pillar of the world's economy? The pieces are definitely moving, and the ambition couldn't be clearer.
Today, we are diving into one of the biggest economic stories on the planet right now. India's absolutely massive investment in its own foundation. And listen, this isn't just about pouring concrete for new roads and bridges. No, this is a master plan to build the future of a developed nation, brick by brick and, well, click by click. Let's get into it. What you're seeing here is a country in the middle of a truly historic transformation. It's so much more than just construction. It's a complete re-engineering of its entire economic landscape. We're seeing this huge shift away from just doing isolated projects to creating one massive, cohesive plan to boost connectivity and competitiveness on a scale that is, frankly, breathtaking. And this quote from the Economic Survey, man, it just gets right to the heart of the whole strategy. The two words you really got to focus on are central and sustained. This proves this isn't some temporary spending spree. Nope. It's a deliberate, long-term vision that uses public investment as a powerful engine for growth, year after year, after year, after year.
Okay, so let's start with the physical foundation, what we're calling the bricks. This is all about the core stuff that physically connects a country of over 1.4 billion people. We're talking the roads, the railways, the ports, basically the very arteries of the economy.
Just look at this number, 99.1%. Let that sink in. That's how much of India's enormous railway network has now been electrified. I mean, that is a monumental achievement. It means faster, more efficient travel, for sure, but it also transforms one of the world's biggest rail systems into a much greener, more sustainable engine for the entire economy.
And it's not just the railways. The exact same kind of transformation is happening at India's ports. Now, what's really interesting here is that this tells two sides of the same success story. On one side, you see this huge jump in the total cargo being handled. But then you look at the other side, and at the exact same time, the average time a ship spends just sitting in port has been slashed by over 30%. That efficiency boost is an absolute game changer, making Indian exports way more competitive and really strengthening its spot in global supply chains.
Of course, all those bricks, the trains, the ports, the factories, they need a massive amount of power. So for our next section, let's look at how India is fueling all this growth. And it's really a two-part story, getting energy to everyone and leading a green energy revolution while they're at it.
This chart, wow, it just illustrates the life-changing impact of this push perfectly. Back in 2014, if you were in a rural area, you got power for about 12.5 hours a day. Today, that has jumped to nearly 23 hours. Just think about what that actually means for a student trying to study at night, or a small business trying to run its equipment, or just a family's quality of life. The energy access gap is pretty much closed. But here's the thing, it's not just about more power, it's about cleaner power. And this is where the story gets really, really exciting. Solar energy now makes up over half, 52% of India's entire renewable capacity. This isn't just some minor shift, This is a fundamental structural transformation that puts India right at the forefront of the global clean energy transition. So you might be wondering, how on earth do you manage this brand new energy landscape? Well, that's where something called the India Energy Stack comes in. The easiest way to think about it is like a digital operating system for the entire power grid. It creates this one common platform that connects everyone, from the big power plants to innovative startups, and even down to individual homes with solar panels that can now sell their extra power back to the grid. It's the digital brain making the whole system smarter and way more efficient. Okay, so we've covered the bricks and the power. Now let's talk about the clicks. This is the digital superhighway being built right on top of that physical foundation, and it's transforming India's economy and its society at an absolutely incredible pace. Let's just start with the most basic building block, connectivity. Phone connections have soared past 1.2 billion. But here's the crucial part of this story. The fastest growth is happening in rural areas. That means the digital divide is actively being bridged, giving millions and millions of people access to online services, education, and the digital economy for the very first time. But the really wild story is the explosion in internet usage. We're going from around 250 million users back in 2014 to over 1 billion today. That's a 4-fold increase. So what was the rocket fuel behind this incredible adoption? And here's your answer. This slide tells the whole story. On one side, you have the price of data in 2014, about 300 rupees for a gigabyte. On the other side, the price today is just over 8 rupees. As that cost just plummeted by over 97%, it unlocked mass digital adoption and fueled that internet explosion we just saw. It was nothing short of a revolution in affordability. And this digital revolution isn't just about making old tech cheaper. No way. It's about building a future-ready network. In a remarkably short amount of time, 5G services have been rolled out across nearly the entire country. We're talking next-generation speed and connectivity now in the hands of millions. So, how do we tie all of this together? The bricks of physical connectivity and the clicks of the digital world. They aren't separate stories. They are two halves of a single, integrated strategy, and it's all aimed at a very specific, very ambitious long-term goal. So, how do you coordinate all these massive moving parts? The answer is something called PM Gati Shakti. Think of it as the master plan, the digital brain for this entire infrastructure push. It's a unified platform where every government ministry can see what all the others are doing in real time. This stops things like a brand new highway being dug up a year later just to lay a fiber optic cable. It's all about building it right and building it together from day one. And ultimately, this is the big takeaway. This integrated network of physical roads and digital highways, all powered by cleaner energy, is the foundation for what's called Viksit Bharat, which is the vision of a developed India by the year 2047, its 100th year of independence. Every single project we've talked about is a building block for that very future. Which leaves us with this final thought. As this vast integrated network of infrastructure comes online, connecting every single corner of the country physically and digitally, the real question is this: what new opportunities, what incredible innovations, and what amazing potential will it unlock for every single one of its 1.4 billion citizens? The foundation is being laid. What gets built on top of it will define India's next chapter.
So, how does the world's fastest-growing major economy tackle climate change without slowing down its own development? It's a huge question. Well, India's latest economic survey lays out a really unique and practical strategy, and we're going to break down that playbook for you.
And you've got to understand the challenge here is just staggering. India is aiming to become a developed nation by 2047. But at the same time, climate change is a massive threat. We're talking droughts, floods, rising seas. It's an incredibly high-stakes balancing act with pretty much zero room for error.
So yeah, that really is the multi-trillion-dollar question, isn't it? How do you win on both fronts? Well, India's answer is to not even see them as two fronts. The core idea is that growth and climate action are actually two sides of the very same coin.
And this quote right here from the survey itself just perfectly captures the whole philosophy. It's development first. The idea is simple but powerful. A prosperous, growing economy is actually your best defense against climate change. It's a super pragmatic, evidence-based strategy, not an alarmist one. Okay, so let's get into the first pillar of this strategy: adaptation. For a country as vulnerable as India, building resilience isn't just some environmental side project. No, it's a core development goal. It's about protecting people's livelihoods and all the investments being made in the country.
So, how does this actually look in the real world? Well, the National Action Plan on Climate Change is designed to weave this idea of adaptation right into the fabric of India's most critical sectors. We're talking agriculture, water, cities, coasts. It's not about isolated projects. It's about making everything more resilient from the get-go.
And what's really cool is seeing how this high-level policy is sparking all sorts of local innovation. You've got community-led projects to restore springs in Meghalaya, and in Ahmedabad, they've got this awesome Cool Roof initiative. It shows that states and cities are coming up with their own creative, bottom-up solutions.
And here is a perfect example of this whole strategy in action: the MISTI program. It sounds great, right? It's about way more than just planting trees. I mean, look at these numbers. They're restoring a massive 540 square kilometers of mangroves. That protects coastlines, it creates jobs, and it captures 4.5 million tons of carbon. That's a triple win for adaptation, for the economy, and for the climate.
All right, on to the second pillar: cutting emissions. And the key word here is pragmatism. India is absolutely aiming for a low-carbon economy, but
And this is a big but, not at the expense of energy security or industrial growth. Those things are non-negotiable for a developing nation. You know, it seems like India is really trying to learn from what has and hasn't worked elsewhere. So instead of some disruptive, one-size-fits-all approach that could be really costly, the plan is for a more gradual, measured transition. The goal is to make sure energy stays reliable and affordable while also ramping up renewables, nuclear power, and green hydrogen.
But that leads to a really tricky question for any growing economy, right? How do you get your heavy industries to decarbonize without just killing their growth? Well, India's answer is pretty clever. Let the market do the heavy lifting. And that brings us to this new carbon credit trading scheme. Okay, think of it like this. The government sets emission limits for big industries like steel and cement. Now, if you're a company that's super efficient and you come in under that limit, you get to sell your leftover carbon credits. And who buys them? The companies that went over the limit. It's a really smart, market-based way to push everyone to innovate and become more efficient.
Okay, pillar number 3. And honestly, this is the biggest hurdle of them all. Money. The Economic Survey is crystal clear on this point. The lack of international climate finance is the single biggest roadblock to India's climate ambitions. Just look at this number. It's kind of jaw-dropping. 98%. That's the share of India's climate adaptation funding that is homegrown, that comes from within India. It just shows this massive gap between the promises made by developed nations on climate finance and the reality on the ground. This chart really paints the picture, doesn't it? That tiny, tiny sliver, that's international funding. The rest is all domestic. India is essentially having to go it alone, paying for a global crisis that, historically, it did very little to create.
So what's the plan then? Well, it's self-reliance. India is busy building its own green finance ecosystem. We're talking everything from sovereign green bonds to attracting foreign direct investment in renewables. If the global capital isn't there, the plan is to generate it at home.
So, just to recap, we've got adaptation as development, a pragmatic energy transition, and a focus on domestic finance. But how do you tie it all together? Well, the final piece of the puzzle is smart regulation. And this is a really major shift in thinking. The old way was this top-down, command-and-control approach to environmental rules. India is moving away from that and toward a more collaborative, trust-based system that's designed to work with business, not against it, to achieve green growth. And you can already see this happening. There's a new digital platform that's making environmental clearances way faster and more transparent. Regulations are now based on risk, so the bigger potential polluters face stricter rules. It's all about being smart, not just being strict.
I think this quote really just says it all, doesn't it? India's entire approach is anchored in development realism. The core belief here is that a healthy economy and a healthy planet aren't opposing forces. In fact, they absolutely depend on each other.
So all this leaves us with one final big question to think about. Is India's development-first model just a necessary compromise for a growing country, or could it actually be a whole new playbook for how everyone can build a more sustainable planet?
So India has this huge ambition, right? To become a developed nation, or Viksit Bharat, basically, within our lifetime. It's an incredible goal. But you know, a future like that isn't just going to be built on roads or factories. It's going to be built by its people. Because the real story of India's future, well, it isn't about steel and concrete. It's all about the health, the knowledge, and the resilience of its next generation. 145 crore people. Just take a second and let that number sink in. That isn't just a statistic, it's a whole universe of potential. So the biggest question on the table is, how do you build up that human capital? You know, the health, the education, for every single person to have a shot at a great life. This is, without a doubt, one of the biggest and most important national projects happening anywhere on Earth right now. Okay, so here's our game plan for this explainer. First, we'll look at the big picture, building India's future. Then, we're going to dive deep into education and a big paradox that's emerged. We've got access, but do we have quality? After that, we'll jump over to the shifting battlefield of healthcare, see how these two worlds are starting to collide, and finally, we'll map out the path forward for building a truly resilient nation. You see, for India to really achieve that developed status, the whole strategy really comes down to two main pillars: education and health. And it's so important to get this. These aren't just social services anymore. They are the engines of economic growth, the ladder for social mobility, and the foundation of national well-being. They're basically the essential software for a country to thrive. And this really gets to the core philosophy, leaving no one behind. And look, that's not just some catchy slogan. It means that education and healthcare have to be the great equalizers, giving every single person, no matter where they come from, the tools they need to build a better life for themselves. This is what inclusive growth really looks like in practice. So, let's kick things off with education. For decades, the mission was super clear. Get kids access to school. Build the buildings, open the doors, get them in. And honestly, on that front, India has made some absolutely staggering progress. But as we're about to see, just having the schoolhouse is only the beginning of the story. A brand new and much more complicated challenge has popped up because of that very success. And I mean, you can't argue with these numbers. The success in providing access is just undeniable. Take a look at the progress in just the last few years. Functional toilets for girls, which is a huge deal for keeping girls in school, are now basically universal. Electricity has reached almost every single school. In the number of schools with computers, it's almost doubled. The physical buildings, the basic infrastructure, for the most part, it's there. But, and yeah, this is a big but, all of this incredible progress has uncovered a kind of paradox. We've built the schools, we've got the lights on, but are the students inside getting the kind of education they actually need to succeed in the 21st century? And here is that paradox in black and white. This table shows something called expected years of schooling, which is pretty much what it sounds like. How many years of school a kid starting today can expect to get. Now, despite having one of the biggest school systems on the planet, India's number, 13 years, is still lagging behind countries like China and Brazil. So, kids are in school, but the data tells us they aren't staying long enough. And it begs the question, what are they actually learning while they are there? This chart really helps explain what's going on. It shows the gross enrollment ratio, which is basically the percentage of kids enrolled at each level of school. And you can see in the beginning, enrollment is incredibly high, over 95%. But just watch what happens. As kids get older, the numbers just fall off a cliff. By the time they get to the secondary stage, almost a third of the students are gone from the system. They're dropping out. And every single one of them represents a loss of that human capital we've been talking about. And you know, the reasons for this go way beyond just what happens in the classroom. This right here is such a powerful finding. The level of a child's mother's education is one of the biggest predictors of how well that child will do in school. It's just a crystal clear reminder of how social progress and educational progress are completely tangled together. You empower one generation and you directly lift up the next. All right, let's pivot now to that second pillar, health. And just like with education, the story of health in India is one of incredible victories against old enemies, like infectious diseases. But the battlefield? It's changing. New and way more complex threats are popping up. And they're not coming from the outside. They're coming from inside our own homes and our daily lives. But first, we have to take a moment to celebrate a massive, massive win. Since 1990, India has slashed its maternal mortality rate by a staggering 86%. That is a monumental achievement in public health, blowing past the global average. It's proof of what can happen with focused, sustained public health campaigns. Just amazing. But as India grows and develops, it's going through something called the epidemiological transition. Now, this is a really key idea. It's the big shift in what makes people sick. We're moving away from a world dominated by infectious diseases to one where chronic, lifestyle-related conditions, what we call NCDs, are the main problem. And this means India is now facing a double burden, fighting off both the old diseases and the new ones at the very same time. And this chart, wow, it shows you just how dramatic that shift has become. Non-communicable diseases, we're talking about things like heart disease, diabetes, cancer, they now cause more than half of all deaths in the country. This wasn't a sudden outbreak. It's a silent epidemic that has completely changed the game for the nation's health priorities. Okay, so this is where it gets really interesting. This is where our two pillars, health and education, really start to crash into each other. The new challenges India is facing, they don't fit neatly into separate boxes anymore. They're these messy, complex problems that hit both our physical health and our ability to learn and succeed. Let's make this real for a second. Think about ultra-processed foods, or UPFs. You know what I'm talking about. The snacks, the sugary drinks, the instant meals that are made in a factory and are loaded with fats, sugars, and salt. They're everywhere now, and they are a massive, massive driver of those NCDs we were just talking about. And it's a problem you can't solve just by telling people to eat better. So, what do? Well, the strategy is a three-pronged attack. First, you regulate. Make the rules stronger with clear labels on the front of the pack so people know exactly what they're buying. Second, you create awareness. Run targeted campaigns aimed right at young people in schools and colleges. And third, you use economics. Maybe explore putting these unhealthy products into a higher tax bracket to make people think twice before buying them. Now, let's talk about another modern challenge, one that sits right at that intersection of learning and well-being. Digital technology has been an absolute game changer for education, no doubt. But it's got a dark side. And it makes you wonder, are we just trading one set of problems for another? I mean, just think about this for a second. Nearly 90% of young people in rural areas, between 14 and 16, now have a smartphone they can use at home. That is an unbelievable jump in connectivity and access to information. But with that comes an unprecedented level of exposure to, well, everything. And with all that exposure, the risks are very real. We're now seeing the impacts of what some are calling digital addiction. We're talking about rising anxiety and stress, a direct hit to how well kids do in school, and making them more vulnerable to things like cyberbullying, online scams, and even real money gaming. This is a health crisis and an education crisis all rolled into one. So where does all this leave us? What's the way forward? Well, to tackle these complex, interconnected challenges, you need an equally integrated approach. We just can't think about health and education in their own separate little bubbles anymore. To forge a truly resilient nation, the solutions have to be holistic, and they have to be smart. So what does that actually look like on the ground? Well, it means using technology and data to pinpoint health hotspots where problems are most concentrated. It means empowering those amazing frontline health workers with new digital tools to help them do their jobs even better. It means launching huge nationwide campaigns that don't just give information, but actually inspire people to change their behavior. And so critically, it means we have to formally bring digital wellness and literacy into the school curriculum itself. Which really brings us to this final, all-important question. India's huge population is often talked about as its greatest challenge. But what if? With the right investments in health and education, with a real focus on quality and well-being, and with the courage to face these new, complex problems head-on, can this greatest asset actually become its greatest strength? The answer to that question is what will define India's story in the 21st century.
You know, India is sitting on what you could call a demographic goldmine, but there's a catch. In this explainer, we're going to dive deep into a really critical chapter from the latest economic survey. We'll unpack the massive challenge and the even bigger opportunity of getting skilling right for one of the world's largest workforces. Let's get right into it.
First things first, let's just try to wrap our heads around the sheer scale we're talking about. India's workforce is over 500 million people. I mean, that's not just a number. That's a potential economic superpower. Economists have a great term for this. They call it the demographic dividend. Think of it like a golden window of opportunity for a country where there are more people working and earning than those who are dependent. It's a massive engine for growth.
And right there, that brings us to the absolute heart of the issue. Having a huge workforce is a powerful tool, for sure, but only if it's the right tool for the job. So the big question is, are these hundreds of millions of people actually equipped with the skills they need for a digital-first, rapidly changing global economy? This isn't just a billion-dollar question. The answer could literally shape the future of the entire global economy.
Because here's the core challenge, right? A massive workforce is only a true advantage if its skills match the jobs of today and tomorrow. And right now, there's a really significant gap between the skills people have and the skills industries actually need.
Wow, this slide just lays the problem bare. Just take a look at these numbers. For every 20 young people in India, only one has received any kind of formal vocational training. A staggering 95% are basically learning on the fly or not getting any formal training at all. You see, this isn't just a skills gap, it's a chasm that threatens to swallow that whole demographic dividend we just talked about.
So, because of that, the thinking has fundamentally shifted. The old goal was simple: just create more jobs. But the new post-pandemic vision is all about better jobs. We're talking about high-quality, sustainable employment that provides a decent income and a real social safety net. It's a huge move from just quantity to quality.
Okay, so to build this foundation for quality work, the very first step was a massive cleanup of the old rules.
For years, India's labor laws were this complex, tangled web that often ended up hindering growth instead of helping it. So the first pillar of the new strategy is a complete modernization of this rulebook.
And this slide just visualizes the solution perfectly. Imagine a tangled mess of 29 different, often ancient labor laws. Well, the government has essentially untangled that entire mess and replaced it with just 4 modern, streamlined codes. This one move slashes the red tape and complexity, which makes it way easier for businesses to hire people formally.
The goals here are really twofold. On one hand, yeah, the new codes are designed to make life easier for businesses and give them more flexibility. But on the other hand, and this is so critical, they extend Social Security to millions of people who never had it before. And for the very first time, this includes formally recognizing and protecting gig and platform workers. It's a really strategic balancing act.
But look, legal reforms are only half the story. The second, and you could argue the most important pillar, is a complete overhaul of how India even thinks about skill development. And this isn't just a little tweak, it's a fundamental redesign of the entire system from the ground up.
This quote from the Economic Survey just cuts right to the core of the new strategy. The problem isn't a lack of training programs. The problem is that for years, that training just didn't translate into real-world value. A good job with good pay. The new focus is simple. It's all about results, not just enrollment numbers.
This slide really lays out that fundamental shift in thinking. The old model was supply-driven. Basically, you build a bunch of courses and you just hope people show up. The new model is completely industry-driven. It starts by asking employers, hey, what do you actually need? Success is no longer measured by how many people sign up, but by actual employment and higher wages, with a huge emphasis on learning by doing through things like apprenticeships.
So, what does this new playbook look like in practice? Well, it means starting vocational education much, much earlier, right inside the school system. It means employers are no longer just consumers of talent, they're actually co-creators of the curriculum. And it means creating flexible, modular pathways so people can continue to upskill throughout their careers, not just in some one-off course.
Okay, so you've reformed the laws and you have a whole new approach to skilling. But how do you connect all of these pieces? The learners, the trainers, the new rules, and millions of employers? Well, the answer is technology. India is building a massive digital backbone to wire this entire ecosystem together.
The vision here is to create a single, seamless digital infrastructure. Think of it like a public utility, but for skills and jobs. It's a place where a student can find a relevant course, a trainer can list their services, and an employer can find the exact talent they need, all connected and all communicating with each other.
This slide gives us the perfect metaphor for it. What's being built isn't just a website or an app. It's a whole new piece of national infrastructure, but for people. It's designed to connect the country's vast talent pool to economic opportunity, just like highways and ports connect physical goods across the country.
And here are the actual gears that make this digital engine run. You have the Skill India Digital Hub, which is a one-stop shop for training. Then that plugs into the National Career Service Portal for job matching. And all of it connects to the eShram Portal, which is a massive database of unorganized workers. So when you link these three things, you create this powerful, data-rich system that can basically see the entire labor market in real time.
And this brings us full circle, right back to the demographic dividend. The key word in that whole definition is potential. A massive workforce isn't an automatic win. That potential only becomes a reality if that population is productive, skilled, and actually employed in quality jobs.
So the single biggest takeaway from all of this, the new laws, the skilling revolution, the digital backbone, is that it all points to one ultimate goal: turning that demographic potential into a powerful economic reality. It's a nationwide effort to ensure that India's greatest asset, its people, are the ones who will power its future. But the race is never truly over, is it? India is building an incredibly ambitious system, but it leaves us with one final crucial question. As technologies like AI advance at an exponential rate, can this new system move fast enough? Can it adapt, reskill, and ultimately win the race against constant change? The future of India's economy may very well hang on that answer.
All right, let's jump right in. Today, we're diving into something pretty huge from India's latest economic survey. We're going to unpack Chapter 13, which is all about a massive shift in rural development. It's about moving from just asking people to participate to actually building real partnerships with them. So let's start with the big question, right? How is the world's most populous nation actually rewriting its rural story? Well, what the survey shows is this incredible story of transformation. It's being driven by a whole new playbook that mixes policy, tech, and community power in some really, really smart ways. So first things first, we've got to talk about the sheer progress in lifting millions of people out of poverty. And this isn't just some dry statistic. It's a deeply human story that we can literally see playing out, told through data and even on maps. Now, to really get what's going on, you need to know about this thing called the Multi-Dimensional Poverty Index, or MPI. Unlike old school measures, the MPI doesn't just look at how much money someone makes. It paints a much clearer picture by including things like health, education, and basic living standards. It's a game changer for understanding poverty. So, what's the big reveal from this MPI? Well, the numbers are, honestly, they're mind-blowing. If you go back to 2005-06, more than half the country, a staggering 55%, was considered multidimensionally poor. That means they lacked basics like clean water or a decent education. Fast forward to 2022-23, and that number has crashed down to just 11.28%. That is a massive, massive change in a pretty short amount of time. And nothing shows this better than these maps. Seriously, take a look. On the left, that's 2015-16. See all that red and orange? That means high poverty. Now look at the map on the right, from 2022-23. It's practically a sea of green. Every single one of those color changes you see, that represents millions of families getting a real shot at a better life. It's powerful stuff. So you're probably asking, how on earth did that happen so fast? And that's where we get to the real heart of this story, a total rethink of the rural development playbook. They basically flipped the whole strategy upside down, moving from a top-down approach to a ground-up partnership. This really breaks it down. The old way? It was all top-down. Think centralized planning, where a one-size-fits-all solution was sent out from the capital. But, what works in the mountains might not work on the coast. The new model? It just flips the script completely. It's all about being decentralized, people-centered, and most importantly, letting the local voices shape the solutions that affect their own lives. And the whole thing is built on this really powerful idea called Jan Bhagidari, which basically means public participation. But it's not just a buzzword. The survey shows it's a real-world plan where communities, farmers, women's groups, you name it, are directly involved in planning and rolling out projects. It makes everyone a stakeholder in their own future. Okay, so how does this whole partnership thing actually work in the real world? Well, the economic survey points to two main engines that are driving this whole transformation forward. Think of them as the secret sauce: technology and good old-fashioned community power working together. All right, let's start with the tech side of things. Technology here isn't just about making things faster, it's a genuine catalyst for inclusion. It's being used to tear down old barriers and get crucial services into the hands of people in even the most remote corners of the country. And we're not talking about some futuristic fantasy here. This stuff is happening right now. You've got the SBMITVA scheme, where they're literally using drones to map out village properties. This gives people legal ownership cards for the first time ever, which unlocks things like bank loans. Then there's the Namo Drone Didi initiative, training rural women to be drone pilots. And in some villages, farmers are getting AI-powered alerts about their soil and the weather. It's amazing. But here's the thing. Tech is only one side of the coin. The other, and you could argue equally important engine, is the community foundation itself. It's all about intentionally building up and using the power of social networks and local groups. And you can see the real-world impact of that community focus right here, especially through the National Rural Livelihoods Mission. The numbers are just incredible. We're talking about almost 150,000 bank sakis. These are local women who act as banking agents in their villages, and nearly 400,000 new rural businesses started. And check this out, the Lakpatati Didi initiative. It has a national goal to help 30 million women and self-help groups earn a steady income. That's transformational. This is where it all comes together. The survey makes it super clear that this isn't just about economics. It's not just about getting poverty numbers down. The real goal is way bigger. It's about a deeper kind of inclusion, one that goes beyond poverty and aims for dignity and equal rights for absolutely everyone. And this quote from the survey just says it all. The goal is to build a society where growth leads to fairness, dignity, and equal rights for all sections of society. It's not just about a richer country. It's about building a society that's fundamentally fair. And they're not just hoping this happens. There's a real strategy here, built on 4 pillars. You've got social empowerment with programs for seniors, then economic support, with help for entrepreneurs. Of course, education is a huge piece, with scholarships and schools. And finally, a rehabilitative safety net for the most vulnerable people, making sure nobody gets left behind. Okay, so with all this amazing progress, there's one massive question left, right? How do you keep the ball rolling? How do you sustain this incredible momentum? And the survey's answer is pretty clear. You double down on what works. You amplify it. That means creating more local opportunities, encouraging innovation right there at the grassroots level. But, and this is key, you do it while protecting and preserving the local culture. It's growth that respects identity. And that really leaves us with a powerful idea to chew on, doesn't it? What we're seeing here is this incredible fusion of ancient community wisdom and hyper-modern technology. So the real question for the future is, what new possibilities can be unlocked for rural India, and maybe for the whole world, when you truly bring those two forces together? Something to think about. Thanks so much for joining me. Welcome to The Explainer. Today, we're unpacking a really big idea, straight from India's latest economic survey. It's all about how a nation can tackle the global AI race, not by trying to outspend everyone, but by outthinking them. It's a fascinating approach. So what you're seeing here is the core of it. We're diving into India's official AI strategy, a fascinating blueprint that really leans into the nation's unique strengths and, its economic realities. All right, so here's how we're going to break it down. We'll start with the big picture, the global AI race. Then we'll get into what makes India's path so different. After that, we'll talk about the people powering this whole thing, the rules of the game they'll have to play by, and finally, we'll look at the roadmap for the future. Okay, first up, the global AI race. Everyone talks about this AI arms race, right? It feels like the whole world is in on it. But what the report makes really clear is that it's a very specific kind of race, and, well, it's an incredibly expensive one to run. Right now, the frontier of AI is completely dominated by just a few big players. They're all using what's called the frontier model. And really, it's all about one thing: scale. We're talking immense capital, just mountains of data, and a ton of energy to build these massive one-size-fits-all AIs. Frankly, it's the kind of thing only a handful of global tech giants can even dream of affording. And this is where you see a huge clash. On one side, you've got this global model that's just chasing scale for the sake of being the biggest, but that model just doesn't fit with India's reality. Here, things like capital and energy are real constraints. Plus, the goal isn't just growth at any cost. It's about making sure that growth is spread out and includes everyone. I mean, just look at the numbers here. The resource gap is absolutely massive. High-income countries have 73% of the world's data centers. 73%. China has about 11%, and India, just 3%. So right away, you can see that a strategy based on just copying that super compute-heavy approach, well, it's just not going to work. It's a non-starter. And that leads to a really crucial point. For India, being a passive consumer, just buying AI from other countries, that's actually the riskiest position to be in. So standing still is not an option. To avoid getting locked into technological dependence, India has to carve out its own path. So what does this different path actually look like? Well, the strategy has a name for it: the bottom-up strategy. So the idea here is to completely flip the script. Instead of pouring all resources into building one giant AI model to rule them all, the focus is on creating a whole network of smaller, more efficient, application-specific models. These are AIs tailored to solve local problems. You can think of it less like a single massive brain and more like a distributed nervous system, with each part designed to handle a very specific real-world job. And this quote from the economic survey really sums it up perfectly. India's opportunity lies in deploying AI in a way that is economically grounded and socially responsive. It's all about being pragmatic, right? It's about building AI that actually solves tangible problems for people in things like agriculture, healthcare, finance, instead of just getting caught up in the latest tech hype. What's really smart about this is that the whole bottom-up strategy plays directly to India's unique strengths. We're talking about being a top global contributor to AI research, having this massive and growing community of open-source developers, and an absolutely unparalleled diversity of data across every sector you can imagine. It's a plan built on leveraging people and their talent, not just a huge pile of cash. And here's a really interesting twist. The report suggests that India's position as a late mover isn't a weakness at all. It's actually a strategic advantage. Think about it. By watching the costly, super energy-intensive path the early adopters took, India can learn from their mistakes and leapfrog directly to a more resilient, efficient, and sustainable AI ecosystem right from the get-go. But of course, a successful AI strategy isn't just about the tech, the code, and the servers. At its heart, it's fundamentally about people. And the goal isn't just to adopt AI. The focus shifts entirely away from automating jobs to augmenting them. The idea is to create meaningful, high-skilled jobs that AI can help with, not replace. It's all about using AI as a tool to make jobs better, not get rid of them, by zeroing in on the skills where humans will always have an edge. So the plan actually calls for mapping out and investing in these future-proof, human-centric sectors, things like nursing and geriatric care, culinary sciences, advanced metalwork, jobs that need a real human touch, empathy, creativity. These are all areas where AI can be a helpful assistant, for sure, but it can never truly replace the person doing the job. It's a vision where AI is built to serve us, not the other way around. Okay, so you have the strategy, you have the focus on people, but to make it all work, you absolutely need a smart and balanced set of rules. The rules of the game, so to speak. And that brings us to the really big challenge. How do you govern data and AI in a way that builds trust and sparks innovation, without accidentally stifling growth? It's a tough balancing act, especially when it comes to managing India's most strategic asset in this new era, its data. So, the report outlines a new framework. Instead of a rigid rule like data localization, where data can't leave the country, it proposes something much more flexible, called accountable portability. So data can move, but the accountability for how it's used always remains in India. The rules are also risk-based, which is super important. That means a lighter touch for startups and higher obligations for big-scale users. And finally, there's this key idea of value retention. Basically, if you're a firm benefiting from Indian data, you have to contribute back to the domestic AI ecosystem. It's about sharing the value. And this is absolutely crucial. This framework is not a free-for-all. It establishes some very clear, non-negotiable boundaries. It draws red lines around high-risk applications, so things like predictive policing, mass facial recognition, social scoring. Those are considered off-limits. This is all about making sure that AI development respects individual rights and democratic values, right from the very beginning. So, the big question is, how do you put all these pieces together? What does the plan look like in action? Well, let's take a look at the phased roadmap for India's AI future. The whole rollout is sequenced really carefully into 3 distinct phases. Phase 1 is all about enable and experiment. That means launching shared infrastructure, promoting open source models, and pooling public datasets to get the ball rolling. Then you move into Phase 2, build and deepen. This is where you codify the rules for AI firms and really foster international cooperation. And finally, the long-term goal is to adapt and secure, building up resilience in advanced computing and making sure the education system is adapting to all the new skills that will be in demand. And at the end of the day, the ultimate goal is to make sure AI becomes a tool for broad-based productivity and dignified work. It brings us right back to the core vision. This isn't just a tech policy, you see. It's a much bigger plan to align this powerful new technology with India's deepest developmental goals. So India is making a big bet here. It's betting that in the long AI marathon, a deliberate, thoughtful pace can actually beat a frantic sprint. Is it a gamble that's going to pay off? By choosing this path of resilience and inclusion over just imitating the big players, India isn't just trying to compete in the AI race, it's trying to change the rules of the race itself. Welcome to The Explainer. Today, we are digging into a really important chapter from the latest economic survey, all about the state of India's cities. And what it says is pretty powerful. Our urban story isn't a tale of failure, but one of, let's say, unfinished business. So let's get into it. All right, so the whole thing kicks off with this really fundamental idea. Cities, they're our greatest invention. Why? Because when you cluster a bunch of people together, something amazing happens. We become more productive, more innovative. We can achieve things together that we could just never do on our own. And when we talk about this happening in India, the scale is just mind-blowing. I mean, look at this. This data from Oxford Economics is staggering. Between 2019 and 2035, the 10 fastest-growing cities on the entire planet are all in India. Every single one. That is just an explosive pace of growth. So, that brings us to the real heart of the issue, what the survey calls the urban paradox. If our cities are growing so fast, why aren't they becoming these amazing world-class, super livable places? Like a Singapore or a Shanghai. What's really holding them back? Okay, so let's dive right into that paradox. We're going to break down this huge gap between the incredible promise of India's cities and the tough daily reality for the people who actually live in them. First off, let's be clear. Our cities are absolute economic juggernauts. Get this. The top 10 cities have only 9% of the population, but they're pumping out nearly 28% of the country's GDP. That is a massive productivity punch, way higher than you see in the US, Germany, or even China. It's kind of wild. But here's the flip side. All that economic energy often gets choked off. Instead of creating dynamism, it just turns into traffic jams, overstressed infrastructure, and this huge informal economy. So the very density that's supposed to make cities great ends up watering down all those potential gains. So what is it? What are the chains that are holding these urban engines back? Well, the survey points to a few really concrete problems, things you can literally see and touch every day. The first big one is governance, and this is a huge point. Think about it this way. The world's great cities are governed. They have real power to make decisions and to compete on a global stage. Our cities, on the other hand, are often just administered. Power is so spread out, it feels like it's designed more to avoid blame than to actually get anything done. It's about complying, not competing. And what does that look like in real life? Well, you spend a ton of money building a shiny new metro line, right? But the city itself has no power to change the zoning laws around the new stations. So you can't build dense housing or new businesses there, and you end up with what the survey calls this brilliant phrase, concrete without consequence. We build this stuff, but it doesn't really change anything fundamental. Okay, the second major problem, and this is a fascinating concept, dead capital. It sounds dramatic, I know, but it's a perfect description. It's an asset, like a piece of land in the middle of a city, that should be incredibly valuable, but it's stuck. It can't be used productively because it's tangled up in a web of inefficient rules. So why is so much of our urban land dead? Well, a few big reasons. We have these really strict limits on how high we can build, so our cities can't grow upwards. Then you have the nightmare of unclear land titles. You're never quite sure who actually owns what. And the whole market is just broken into tiny, inefficient pieces. It's a real mess. And this picture, this right here, tells the whole story. On the left, Delhi at night in 2012. On the right, 2023. You see that massive outward explosion of light? That is urban sprawl. Because we can't build up, we just build out and out and out. And for people, that just means longer commutes, more pollution, and honestly, a lower quality of life. All right, so we've talked about the physical stuff, the governance and the land, but the survey goes even deeper. It talks about something you can't see, what it calls an invisible fault line running right through our cities. And the argument here is that what makes a city truly work isn't just about budgets and bridges. It's about how we all behave together. It's about this unwritten agreement, the social contract that keeps things running smoothly. And check this out. They mention a survey on gross domestic behavior, and it finds this really human contradiction. Pretty much all of us say we value civic responsibility, doing the right thing in public. But our actions don't always match our words, do they? I mean, just think about it yourself. We keep our own homes spotless, right? We take so much pride in them. But then you step outside into a public park or a street, and it's like it's suddenly nobody's responsibility. There's this massive disconnect. Now, the easy answer is to blame culture, but the survey says, hang on, this isn't really a moral failing. It's a rational response. They call it an institutional equilibrium. Basically, if public services are unreliable and the rules don't apply to everyone equally, well, why would you bother trying? The social contract just frays and breaks down. Okay, so after all of these problems, you might be feeling a bit down. But this is where the conversation turns hopeful. How do we actually start fixing things? This is all about reimagining what our cities can be. And the answer isn't as simple as throw more money at it. It's about a whole new philosophy. Imagine if we designed cities to save people's time, not just move cars. Or if we focused on creative energy, not just economic output. And hey, what if we actually worked with the massive informal economy that is the lifeblood of our cities, instead of trying to wish it away? It's a huge shift in thinking. This quote, it just nails it, doesn't it? Aspirational but exhausting. That is the perfect description for so many of our cities. You move there with these huge dreams, but just getting through a normal day takes so much energy. You have to be so resilient just to survive.
So the ultimate goal is to shift from what they call survival-oriented urbanism, where you're just trying to get by, to possibility-oriented urbanism. A city should be a place that expands your world, that makes you feel like you can do anything, not a place that just wears you down day after day.
And that leaves us with this final, powerful question to think about. What would it actually take for our cities to become places that reward our curiosity and our creativity, instead of just constantly demanding our resilience? That's the real challenge ahead, isn't it?
Welcome to The Explainer. Today, we're going to talk about something huge, how one of the world's biggest economies is basically tearing up its old playbook and writing a new one for this chaotic new world we're all living in. So let's dive right in. We're talking about India's incredibly ambitious new economic strategy. In a world where globalization as we knew it is being rewired right in front of us, India's not just trying to survive the chaos. Oh no, it's crafting a game plan to become a nation that the world literally can't do without.
I mean, that Lenin quote, it really hits home right now, doesn't it? It feels like the entire global system is shifting right under our feet. Suddenly, trade policy isn't just about dollars and cents, it's about national security. And when things change that fast, well, countries like India have no choice but to completely rethink their entire game plan.
Okay, so what is this new game plan? At its core, it's a really radical evolution. We're talking about a shift away from the old idea of just being self-sufficient and moving toward this brand new vision of becoming globally indispensable. And it all kicks off by taking a concept that's super deep in India's history and giving it a 21st century makeover.
All right, so the whole foundation of this thing is a modern spin on Swadeshi, which is this historic call for self-reliance. But, and this is a huge but, this is not about closing the doors to the world. Not at all. It's actually the opposite. It's about building up your strength at home so that you can go out and compete even better on the world stage.
And that's the multi-billion-dollar question, right? Is this just old-fashioned protectionism in a new suit? Because look, India's own past shows that just putting up walls can lead to lazy, inefficient industries. So to make this work this time around, the approach can't just be a little different. It has to be way smarter and way, way more disciplined. This comparison right here, it just nails the difference. The old way was about building permanent walls. This new way, think of it more like temporary scaffolding. It's a support system, right? It's there to help your own industries get strong, get buff, so they can go out and win on the global stage. Because the real test of this whole thing isn't just about making stuff you used to import. The real win is creating world-class exports.
Okay, so how do you pull this off without falling into all the old traps? The answer isn't some big, clumsy, one-size-fits-all policy. Nope. It's all about being surgical, being selective, and being absolutely laser-focused.
So instead of trying to do everything all at once, make everything at home, the strategy uses this tiered framework to make some really tough choices. The whole idea is to pour all your effort, all your support, only into the areas that are going to give you the biggest bang for your buck, strategically and economically. It's really about placing smart bets. And this is where the rubber really hits the road. Look at this framework. Tier 1. These are the absolute non-negotiables. Think telecom gear, crucial pharma ingredients, stuff that, for security reasons, you have to be able to make yourself, and fast. Then you've got Tier 2, which is about being selective, upgrading key industries, like medical devices, to make them super competitive. And then there's Tier 3. And this is just smart, right? It's admitting you can't do it all. For some things, it's way smarter to just have a bunch of different global suppliers instead of trying to make it all yourself.
But look, none of this works if your factories can't compete on price. It's that simple. You can't become an export giant if your energy is too expensive, your logistics are a mess, and your raw materials cost a fortune. That's why a huge piece of this puzzle is a national mission to hammer those costs down. They're treating things like energy and logistics as critical infrastructure, just as important as building new roads and ports. But we're not just talking about making things cheaper. No, this strategy goes way deeper than that. The real goal here is a fundamental upgrade to the entire economic machine's capability. And this next idea is so powerful. Get this, advanced manufacturing isn't just about,
making cool, shiny gadgets. It actually works as a disciplining system for the entire economy. Think about it. When you're forced to meet the absolutely brutal quality standards of global markets, you just can't have sloppy logistics. You can't have weak regulations. It forces everything and everyone in the ecosystem to get their act together and level up.
When you look at all the countries that have successfully pulled off this kind of industrial transformation, from East Asia and pretty much everywhere else, you start to see a common thread. It's not a government that tries to control every little thing. Instead, it's a government that acts like a smart, risk-taking partner with industry. You could call it an entrepreneurial state.
And this is so key. What does that mean? Well, an entrepreneurial state isn't afraid to experiment. It's focused on outcomes, on results, not just on following the rules and ticking boxes. It gets that not every bet is going to be a winner, and that's okay, because you learn from the failures. And maybe most important of all, it has the guts, the discipline, to pull its support from companies or industries that just aren't cutting it. The help is supposed to be a catalyst, right? Not a permanent crutch.
So, okay, let's put it all together. You've got this disciplined self-reliance, you've got this smart, tiered prioritization, and you've got this idea of a more capable entrepreneurial state. When you mix all that up, you see it's all building towards a really ambitious endgame for India's role in the world.
This table just lays out the whole journey perfectly. You see, it starts in a defensive crouch, right? Import substitution, just trying to make stuff at home you used to buy from others. Then you evolve. You move to strategic resilience, making sure your economy can take a punch from global shocks by diversifying your suppliers. But that final column, that's the holy grail, strategic indispensability. That is the ultimate goal. That's the point where India becomes so critical to global supply chains that the rest of the world has a vested interest in seeing you succeed.
And really, this final quote just says it all. The goal is to get to a point where the world goes from thinking about buying Indian to just buying Indian without thinking. That's it. That's when you know you've made it. A future where made in India is just the default choice for quality, for reliability, for innovation. A future where India isn't just another player in the global economy, but a critical pillar holding the whole thing up. Look, the strategy is incredibly ambitious and the vision is crystal clear. The only question left now is about execution. And believe me, the whole world will be watching. Hey everyone. So we all know India is an economic giant, right? But here's a question. Why isn't it an undisputed global power just yet? Today, we're going to dig into the government's own analysis to find the single biggest thing holding it back and the 3 keys that could finally unlock its true potential. I mean, this story we hear all the time is one of just incredible economic success. Since COVID, India's growth has been rock solid, consistently near or even above 7%. If you look at all the traditional metrics, the banks are healthy, corporate balance sheets are strong, and governance seems really purposeful. The economic engine is absolutely roaring. And yet, here's the puzzle. This fantastic economic performance, it hasn't quite translated into the strategic influence you'd expect. The Lowy Institute in Australia actually points to a pretty significant power gap, which basically suggests India is punching below its weight on the world stage. So what on earth is the missing piece here?
Well, according to the source material we're looking at, the answer isn't a lack of money or good ideas, or even political will. Nope. The single biggest, most important constraint holding India back right now boils down to one critical concept: state capacity.
Okay, so let's break that down. What is state capacity? It's not just about having power or authority. It's the real, on-the-ground, nuts and bolts ability of the government to actually get things done. It's the difference between having a brilliant plan on paper and making it a reality that actually works for 1.4 billion people. And as we're about to see, building it takes 3 very specific keys.
So where do we start? Well, the very first key lies with the state itself. This is all about a fundamental, deep-seated shift in how the government and its administration thinks, and more importantly, how it operates.
Now check this out, because this slide really gets to the heart of it. On one side, you have the old compliance mindset. It's all about following the rules to the letter, avoiding any kind of risk, which, let's be honest, often leads to just doing nothing. But on the other side, you've got the capability mindset. This is about being more entrepreneurial, taking action even when things aren't certain, actually learning from failures instead of punishing them, and being totally focused on the final result.
And this isn't just some modern management theory. It's a really deep cultural idea. And the source itself highlights this powerful quote from the Bhagavad Gita to make the point. It's basically a call for administrators to focus on taking good faith action and to free themselves from that paralysis that comes from being terrified of bad outcomes.
So how does this actually work in the real world? It's not about being reckless, it's about being smart with risk. There are 3 steps. First, you structure the risk. You create safe zones where it's okay to experiment. Second, you build systems to learn from what goes wrong, not to point fingers. And finally, you have to be agile enough to correct course and change direction when the evidence tells you to without freezing up.
All right, let's move on to the second key. Because state capacity isn't built by the government all on its own. The private corporate sector has a huge role to play in all of this.
But there's a problem. The analysis points to this habit where some big corporations tend to focus on short-term wins. They do this through what the source calls negotiated shelter. Things like getting special protections or cozy deals, instead of doing the really hard work of becoming truly competitive on a global scale through innovation.
But it doesn't have to be this way, right? History is full of examples where the private sector was a massive partner in nation building. Think about America, Germany, or Japan after the war. You had leaders at companies who totally understood that their own success was tied directly to their nation's strength.
So the source proposes this really powerful idea for the corporate sector, a new ethic of stewardship. This is the idea that companies should see themselves almost like trustees of a larger national project. Look, making a profit is still absolutely essential, of course, but it's part of a bigger goal of building up the whole nation's capability, whether that's through new tech, better quality, or skilling up the workforce. Okay, so we've covered the state and the corporations. But this third and final key, this one brings it all home. It's about the role of every single citizen.
Now this might seem like a bit of a random question, but stick with me, because it gets right to the heart of the matter. Think about something as simple as the orderly lines you see for the metro in many Indian cities. That small, everyday action is actually a perfect example of a much bigger principle that has a direct impact on state capacity.
Because here's the absolute kicker. State capacity is co-produced. It's not just something that the government delivers from the top down. It's something that we all build together from the ground up. The state simply cannot succeed without the active, willing participation of its citizens. And when that happens, you get this amazing virtuous cycle. Just look at how it works. It all starts when we, the citizens, internalize norms like paying our taxes or just respecting public property. When that happens, the state doesn't have to spend so much time and energy on enforcement. And the result? All that precious administrative energy gets freed up to focus on the really big, complex problems that only the government can solve.
So there we have it, our 3 keys: a smarter state, a nation-building corporate sector, and responsible citizens. Now let's look at a quick, real-world example of that first key in action, the strategic use of deregulation.
Now, this is a really critical point. The goal of modern deregulation isn't to make the state weaker or have it step back. It's actually a strategy to make the state stronger by shifting its focus away from just policing simple rules towards high-level problem-solving and coordination. It's about working smarter, not harder.
And this isn't just some theory, The source actually details a major initiative that's happening right now to do exactly this. There's a high-level task force working to simplify rules, cut through the red tape, and move towards a system of trust and digital compliance. This is state capacity literally being built as we speak. So, at the end of the day, it all has to come together. No single key is going to work on its own. The ultimate goal, the real game changer, is to create this powerful alignment where a capable state, a productive corporate sector, and an engaged citizenry are all pulling in the exact same direction. And that brings us right back to this image of a globally connected India. The vision is incredible for sure, but making it happen and sustaining it depends completely on getting all the internal stuff right. It depends on building that deep institutional capacity we've been talking about, piece by piece.
Which leaves us with the final and most critical question of all. The economic engine is fired up and ready to go. But can these 3 crucial players, the state, its companies, and its citizens, truly get on the same page and forge the alignment needed to close that power gap and finally unlock India's full potential on the world stage? Well, that is the challenge and the opportunity that lies ahead.